Our mission at Resilient Advisor is to have a significant impact on the retirement crisis by educating and empowering financial advisors to better serve their clients. We bring you industry thought leaders and experts to help you make a difference in the lives of your clients.
Thanks for tuning in to this episode of The Resilient Advisor. My name is Jay Coulter. If I told you that there was an investment that had returned 1,000% over the S&P 500 for the past 20 years, while having about a third of the volatility, I'm sure that would catch your attention. You would probably also think that it was some arcane cryptocurrency or gold or silver, but it's not. Today, I'm speaking with Anthony Zhang, the CEO and co-founder of a company called Vinovest. They are a fintech platform that enables consumers to invest in wine. Anthony, thanks for coming on to tell your story.
Jay, thanks so much for having me on board. I'm excited to chat.
Well, this is unique. Like I told you in our pre-call, normally if I'm interviewing a large cap growth manager, I have a pretty good cadence on how to execute that type of interview. This is completely new to me. Why don't we do it like this? Let's talk about the investment case for wine and then how investment advisors could help clients add it to their portfolio. So let's start with the investment case. What do you think the investment case for wine is?
Absolutely. So I think with wine, there's a few key aspects, right? It's an alternative asset that has low correlation with the market. B, it also has low volatility. So you're getting these really strong returns on their own, but they're also really strong risk-adjusted returns. And I think number three is that it is a part of, I think, a growing trend of collectibles becoming a bigger and bigger part of mainstream investing. So we've got this other tailwind that I believe will start to push wine prices up higher and higher into the future.
And so what are some of the tailwinds that you think could help push those prices higher?
I think number one is really going to be global trends for consumption. You're seeing a lot of emerging countries that have large, wealthy millennial populations, whether it be China or India or a lot of other cities in Asia, where people are starting to want to consume these luxury goods. And especially when we're talking about investment quality wines, these wineries, they can't make any more grape juice. They're farming the same plot of land for decades. And because of also climate change, it's getting hotter and hotter. The yields are getting lower and lower each year. And they're producing wine at lower quantities when there's greater global demand for those wines.
Okay. So to be clear, they're making less wine today than they did a decade ago?
Yep, because their harvests are getting hotter and hotter, yields are getting lower, and unfortunately, they don't want to be able to, farm other places that may be unsuitable for wine because that'll decrease the overall quality.
So when I think of wine, I'm not a wine connoisseur, but I think of the $20 bottle of wine I get at the grocery store. I have a feeling that's not what you're talking about. Could you kind of help viewers and listeners conceptualize the type of wine you're talking about?
Yeah, so not quite grocery store wine. The wine that we're talking about usually is on allocation or on a mailing list. Wine that typically is pretty hard to get your hands on because it either A, is so rare, or B, is so expensive. So usually the wines that we're talking about that are investment quality, anywhere between $200 a bottle and can get up to fetching hundreds of thousands of dollars a bottle. But because there is a big range, it also gives us flexibility when we're working with different clients, designing their portfolios for different needs, different timelines, as well as different price points. But I think to unite the definition of investment grade wine, there's a few key criteria. And I think number one is going to be the scarcity aspect. They're not mass produced. They are very much so place driven. They're have strong brand equity as well so that you can recognize this wine over others. And then number three is going to be that they're ageable. So these are wines that are not meant to really be consumed on day one, although they'll still be delicious. But I think the important part of it is that wine ages, right? A 10-year-old bottle of wine tastes different than a 30-year-old bottle of wine. And wine collectors and enthusiasts and fine dining establishments want to be able to allow consumers to experience that rare 30, 40, 50-year bottle, which is why they become much more sought after when they're older.
So what are your thoughts around wine as an inflation hedge, given the environment that we're in and will be in for a while?
I think that's why a lot of advisors are coming to us because there aren't too many other places where you can find inflation hedges. And especially when you're looking at the historical performance of this asset class, harkening back to, say, 08, 09, or even the dot-com crash, when we were looking at huge drawdowns in global equities, 40, 50% during those two time periods, wine was only down around 10%. So it's proved through two cycles that it has been a pretty strong hedge against recessions and also against inflation during the run-up before that.
It's really hard to do a dividend discount model on a bottle of wine. It's going to be really hard to put a framework around it for a financial advisor to come up with a price that matters. And I can already see the cynical advisor saying, well, this is a greater fool investment. Like, you buy it today and hope that somebody else buys it later. I know that you have much more meat behind that in terms of how you value it today and how that appreciation would go. But for the cynical advisor listening, what do you say to them as it relates to how to price it today and how they could expect to generate returns on that investment?
Yeah, I think for us, we're looking at the sales, right? The consumption of that bottle of wine. And thankfully, there is a robust secondary market, especially for these investment quality wines, right? You're not going to see much retail on your bottle of $2 Chuck, but if we're talking about a $1,000 bottle of Chateau Lafite, not only do you have strong secondary demand at all times, but you also have historicals to be able to look back on, right? This wine has been producing for almost 150 years now, and you can see what an average year 5 Lafite looks like, or a year 10 Lafite looks like, or even a year 20. So you can really model that all out and be able to look ahead with pretty high confidence on what that future price may look like and be able to price it accordingly, get accurate mark to market on a weekly or monthly basis, and be able to confidently talk to your clients about what their returns are looking like.
All right. And is your offering through financial advisors and direct to consumers?
It's both. So we have a both retail and an advisor facing platform.
All right. So before we get into the advisor facing platform, let's go through a little role play. All right. So I have a $5 million portfolio. I manage my money myself, and I like wine, let's say. And so understand that there's a fine wine component to it, but maybe I buy $100 bottle of wine on special occasions. And I think, okay, I want to allocate a certain percentage of my portfolio to wine. What's the process? What are the risks? And what's the experience?
So the process, I think, starts with knowing what you want to get out of this investment. Is this a 5-year hold for you, a 10-year hold, 20-year hold? And then looking at what else you have in your portfolio, I think you want to determine how much risk you want to put on into this investment, whether it be from an allocation standpoint or from an asset level standpoint, because just like stocks, there are your equivalent of blue chip, stable, large cap wines. These will be wineries coming from usually areas that have been producing wine for a long time. We've got a lot of historical data, and the outlook for that region is very stable. On the other hand, if you want to go a little bit more speculative or have a little bit of a higher appetite for risk, there are your emerging regions or your wineries that have just gone over new ownership and are looking to really aggressively change their investment outlook. So those wines can be part of a diversified wine portfolio that can give you some risk as well as your sort of blue chip stability for the asset class. So that's really the process that we want to take the individual investor or the RIA through to determine what's that best portfolio construction. Because just like bonds, there are wines that can hit their peak maturity periods in, say, 5 years versus 10 years versus 20 years. So we've got that flexibility there. And then when we're looking at the risks of the asset class, number one is going to be storage, because wine is, it's a real living thing that can get damaged, right? If you are in a too hot of a condition, too cold of a condition, too much or too little humidity, or even something like exposing it to direct sunlight, all of that can damage the wine and can render that investment to be close to zero. So proper storage and insurance on that storage is going to be really crucial. Number two is going to be the provenance. So where did the wine come from? A wine that we source from your basement is going to have a different retail value than the wine that's sourced direct from the winery sellers. So at Vinovest, we really care about A, where is this wine coming from? And B, how was it stored before we acquired it? And we want to make sure that both of those are in excellent condition to be able to ensure for the maximum resale value of that particular wine.
So you build a diversified portfolio, diversified geographically, diversified by age, and diversified by, it sounds like, storage facility. And then they're all insured. So I would imagine that your returns are impacted by the insurance and the storage facility, but you're still able to generate excess returns historically than traditional equity investments. So that if you think of this as an alternative investment in a broadly diversified portfolio, it gives you the opportunity for some alpha and an inflation hedge. Did I articulate that correctly?
Perfect.
Awesome.
Better than I could have said it myself.
Awesome. And then can you consume your own investment?
Yes, you can. So that's the fun part where someone's going to drink it at the end of the day. And at Vinovest, we've been able to structure this offering so that if you wanted to say, take a few cases and celebrate an anniversary, or maybe save it for a child's graduation as a present, you can absolutely take some of that from our facilities and we can help to arrange to get it shipped to your home. Of course, that does literally mean drinking your profits away, but it's a passion asset for some people as well. And we want to be able to give that optionality to the people who do see it as a way to make money and also a way to have some fun.
A passion asset. I like that term. You might want to trademark that, and we could actually use that with a lot of the crypto folks.
Perfect.
All right. So let's talk about the experience that an RIA or independent firm would have if they leveraged your platform with their clients. And let's talk about it at a very, very high level for the folks that are just being introduced to your firm.
Perfect. So I think it really starts with the allocation that you want into this alternative, or any alternative for that matter. Once we kind of zero in on that, zero in on the size of the vehicle that they want to be able to structure, and also the projected timeline. We can also work into the deal certain redemption periods. Even though wine is a long-term asset class, we do want to provide liquidity and flexibility for both the advisor as well as their clients. So we usually structure some redemption periods where we're actively rebalancing the portfolio anyways, and that gives the clients the option to be able to take some profits off the table, or in case of any sort of unforeseen circumstances. After that, we are the ones who really manage everything. So from the acquisition strategy to the actual procurement to the storage, custody, insurance, we want to make sure that we take everything off the plate of the advisor and they can focus on what they do best, which is growing the relationship with their clients.
So I just want to make sure I understand, are these unallocated? Is this unallocated exposure to bottles of wine, or do you know exactly which wine you own?
So the advisor will know exactly which wines they own. Once we formulate the strategy, we'll go out and actually go to procure those bottles. They'll be able to see exactly like, hey, here's how many bottles I own. Here's how much they're worth at the time of purchase. Here's where they're stored. And then from an ongoing basis, providing updates on future sales of that wine, which ones that we recommend should be rebalanced, which new releases are coming out that could look like attractive opportunities to add to that portfolio, and also updated mark to market when we're looking for reporting and compliance purposes.
Okay, so let's talk about reporting, because you know how important that is to advisors. How do they account for that with their clients?
So the market is pretty robust where we update prices every single day. Usually prices don't move too much from a day-to-day basis, but when we're looking at it on a monthly or quarterly basis, we're able to see which regions are outperforming, which parts of your portfolio are sticking to the strategy, and which sections of your portfolio may be recommended for rebalancing. So that's how we look at the strategy and ongoing reporting for each advisor.
So, but how does the RIA get that data and present it to their clients?
We have a platform that the RIA can log into. We also have reports that we can generate that are in the same format that you'd see say any one of your brokerage statements.
Okay. And then do you facilitate billing on that platform if they're a fee-based advisor?
So usually advisors choose to charge their fees outside of the platform, but we also do facilitate the payments when needed.
About that. All right. So this is fascinating. I'm thinking about other asset classes where you could take this platform and go deliver the same type of service. But wine has a unique marketplace in that where there's interest, there's a lot of interest. And I imagine this is a good marketing tool for financial advisors. How have you seen them leverage this value proposition when they're out looking for new business?
I think they've used it really as that sort of interesting hook, right? Say a client gets a bunch of pitches from advisors, but one of them has access to be able to allocate your wine, or even be able to help source really rare wines, or even just something that for a client looking for alternative exposure, this is probably something that maybe they've heard about from, say, their wine collector friend or wine enthusiast friend, but they're not that into wine. They don't want to manage a whole wine cellar. Now they can do that, right? They can be on that same level or even perform even better than their friends. So we've really seen it as a creative marketing tool that advisors have used to either prospect new leads, re-engage ones that are in the pipeline, or even to work with existing clients on being able to have, a modern strategy moving into the next couple of decades.
Yeah, Anthony, it really is an interesting strategy. Advisors, learn more by going to vinovest.co/advisors. That's vinovest.co/advisors. Anthony, thanks so much for coming on.
Jay, it was a pleasure. Thank you so much for your time.